Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 26th. We got a couple items on the docket today, so we'll start off with the weekly jobless claims. As you can see, we start off with 278,000 people applying for unemployment last week. This week, the forecast was at 275, and it came in much better. It came in a lot less people applying for unemployment at 268,000. So, good numbers there. Also on the agenda here, we got the durable goods orders. We had a 1.9% increase in March. Forecast for April is at 0.9. It got blown out of the water at 3.3%. But this is kind of a little bit exaggerated in the sense that you got the big ticket items here that are really driving this up, like airline deals, where they had a bunch of orders for airline or commercial airlines, which takes about 5 years. Autos were also up, but those are the big ticket items that really brought this up. If you take those items out, it really comes down to about 0.4% increase for everything else on there. Also, if you look at the business side of things, business inventory, what they call the core, we call it a core, but that was even worse. That was actually a negative number for business investments into their own company with their goods orders. So that wasn't as good. So this is a little bit more misleading, this number here for durable goods orders. But on the other hand, we got pending home sales, which is not misleading. That is a good number. We had 1.6% March, a 1.6% increase in pending home sales. And the forecast for April is supposed to taper down to about 0.8%, and it jumped all the way up to 5.1%. So housing still showing strong. We showed good numbers for new home sales and also pending home sales. So April is a good month for both those types of sales. That might be maybe because the tax season was over and people are past that and started looking for homes. So maybe that's part of the reason. I do see a bit of an uptick since then, as well as more listings coming onto the market on a personal side of things, or at least from our market here in Southern California. But overall, not bad numbers here. Stock market's actually down a little bit today. It's taking a little bit of a pause after the last 2 days of going upwards, so it's taking more of a pause today. And then oil is down a little bit. It was up. It did reach yesterday. We were like 49 and change. It went up to about a little over $50 a barrel, and today it's down a little bit. Down. I think last time I looked so far this morning, it's at 49.45. So it's still close to that range, but it came down slightly a little bit. So let's take a look at the bond market. Again, as mentioned this past week, we're going to probably be trading in this range here. We've been touching out the 10-day moving, or I'm sorry, the 100-day moving average, and then 10-day moving average. So as you can see, this is going to start creeping upwards. The 10-day is going to come here. We're going to get to a point where we're going to have to make a decision, go up or down as a result of this. And with the different resistance levels from the 50 and 25 up here, it could push us downwards, which would raise rates. But as of this week, for the most part, rates are about the same. Have been pretty close in the same range, about the same rates here. All right. Hope you guys have a wonderful day. To kind of kick off, basically, we do have a little bit of improvement in rates today, as we're up about 16 basis points from where we left off yesterday, which was here off the 100-day moving average, and now we're up here. So that's what the green stands for. The green candles means upwards, and the red ones means you're going downwards. All right, folks, have a great day. Thanks so much for watching, and we'll see you guys tomorrow. Bye-bye.